I was really looking for something that would allow me to make money on a monthly basis without having to continually trade my time for money. And I think
Sure.
part of that was because I had had actually by this point I already had 3 kids. So once I had kids, my perspective on life changed quite a bit.
Welcome to the Real Estate Pros Show, where we interview real estate investing professionals from coast to coast, as well as the service providers that serve the real estate investing industry. Our goal is simple: share what's working now to help you improve and scale your business to the next level and meet the pros that can help you get there. Real Estate Pros is powered by Investor Fuel, America's leader in helping real estate investors and professionals build the business you need to live the life you've always dreamed of. Let's start today's show. Property insurance for real estate investors doesn't have to be difficult, but it does need to be there to protect you when you need it. MyInvestorInsurance.com not only provides insurance at 15 to 30% cheaper than traditional agencies, it's built specifically for real estate investors like you. You can set up an account in about 2 minutes, get quotes on properties, turn on and turn off insurance for your fix and flip or rental properties in around 2 minutes without having to talk to anyone directly, all through our portal. There's no better way or faster way to make sure you've got the coverage you need to protect you, and no more lengthy policies either. Once you're set up, you're billed monthly and prorated by the day for however long your policy is active. It's powered by MSI, the third largest independent MGA, with 1.5 million customers and more than $1 billion in cumulative premiums written. Get set up today in about 2 minutes at myinvestorinsurance.com/fuel.
Welcome back to the show. Today's guest, Marianna Osipenko, is a multifamily investor. She has a background in corporate, has an MBA, and has worked for 15 years as the managing director of a business brokerage firm prior to going full-time as a multifamily investor. Mariana, welcome to the show.
Thank you. Very excited to be here.
It's great to have you on here. And I always like to start off at the top of the show by asking guests how they got started, in your case, in the multifamily space.
Sure. So I have always loved real estate. I actually took real estate classes when I was an undergrad at Babson College in Massachusetts. My father was a multifamily investor, so I grew up with it, and I've always been intrigued by what it is and what you're able to accomplish with the multifamily investing. But I didn't get into it full time until 2019 after spending 15 years as a managing director of a business brokerage company. And the reason I made the transition is actually twofold. The first one is the owner of the business brokerage company was looking to retire. So I wasn't quite sure what the future was going to hold there. But the second was, while I loved business brokerage, you're still exchanging your time for money. You know, you're working with the clients, you're trying to get a deal done, you close the deal, you make the money, and then you have to move on and do another deal to continue to make that cash flow. And I was really looking for something that would allow me to make money on a monthly basis without having to continually trade my time for money and look for the next opportunity, and continue to sort of invest more into making the future money. And I think
Sure.
part of that was because I had had actually by this point I already had 3 kids. So once I had kids, my perspective on life changed quite a bit, and I knew that I wanted to have more time freedom. I wanted to spend more time with my kids. I wanted to, meet them at the school bus, and I didn't want to constantly be working in order to provide the lifestyle that I know I wanted to have. So I realized that real estate really was the way to go.
Was the pathway. Yeah. Yeah. When we talk about the multifamily space in particular, longer deal cycles, right? It's more intensive on the underwriting side. And for folks who, maybe first time investors, it can be tricky to get into the space. Walk me through that first deal as a multifamily investor. How did you find it? On market, off market? What type of offer did you make? And also, too, how did you learn about investing in the multifamily space.
Stop living on an island and join the #1 mastermind in America for professional real estate investors. Investor Fuel is a community of hundreds of the nation's top investors working together to build stronger businesses and better lives. In addition to the amazing community of real estate investors acting as a board of advisors for one another, Investor Fuel members have access to 100% funding on purchase and repairs for our members only, a health insurance program, and benefits and discounts that more than pays for the membership of most of our members, meaning it's actually costing you money to not be a member of Investor Fuel. If you're looking to scale your business and build a business that allows you to live the life of your dreams, please visit investorfuel.com today and book a call with our team.
So I actually started out very small, and part of that was because I'm in Massachusetts and prices here are very high. So I knew I wanted to scale and I wanted to be buying the, 12, 15, 20 plus units under one roof, because that's really where you get your economies of scale and you're able to kind of exponentially increase your income. But with Massachusetts prices, that is very hard to
Yeah.
do when you're starting out. So I ended up investing in Western Massachusetts in the Springfield area, which is about 2.5 hours west of Boston. It's a much more working class area. And even there, I had to start with a duplex, which really wasn't what I wanted to be doing. But, you have to start somewhere. And I thought for my
Yeah.
first property, it might be a good idea to start smaller and learn and make mistakes that are only going to cost me a few $1,000s versus, 50 or $100,000. So
Sure.
I ended up connecting with a local property manager who also invested in that market, and his local knowledge and expertise gave me the confidence to make some offers. And I ended up purchasing a property that was owned by HUD, which is like the Housing and Urban Development. So it was almost like in foreclosure. And
Okay.
we ended up getting a really good deal on it. I knew that I wanted a property where I could boost equity pretty quickly and increase my net worth. So I had to buy a property that needed a lot of work. So we bought a duplex, did quite a bit of work for with both of the units. We're able to rent them out at a substantially higher price than they had initially been rented at. And immediately the equity on that property. So I bought it at, I think it was 144,000, and I ended up refinancing it and the value came in at 250. And this was in less than a year. So it was a pretty quick turnaround time. And even though it wasn't a lot of money, but this was my first deal. And it just really gave me a taste of what's possible in real estate and how to
Sure.
accomplish it. Now,
Sure.
I fast forwarded to that year for you very quickly. There were a lot of challenges there. We had to do a lot of renovations. I spent quite a bit of money on it. We made some mistakes. Closing that property took longer because it was owned by the government, so there was a lot of red tape. But the long story is, within a year, I was able to. Now I had to invest into it, so 100,000 wasn't the full equity upside because I think I spent about 30,000 on the renovations.
Yeah.
But
Yeah.
my equity upside was about 70,000 in that year. And it just really kind of opened my eyes to the possibilities. And I was thinking, okay, if I could do this on a duplex, what if I can get into a quad, or I can get into an 8-plex or a 12-plex? So I started scaling locally in that area because I felt good about the property manager I was working with, my local team there. And the market in general, even though property values there were much lower than mostly anything else in Massachusetts. But because my biggest goal was that equity upside, I was able to make it work. So I did quite a few smaller deals over the next few years. And after I did about 6 or 7 of these smaller deals, I sort of realized, okay, this is going well and I'm accomplishing what I set out to do, but I am playing with very small numbers. And because my goal was time freedom and being able to spend more time with my kids, I knew that I had to get into the bigger properties, the higher unit counts, to be able to
Yep.
make the money that I was looking to make. So that is how I started looking at larger deals. And all of my portfolio now is based out of state because, again, Massachusetts is very expensive.
If you're looking for consistent, high-quality leads, look no further than Investor Machine. Investor Machine isn't just another agency, it's the most sophisticated, data-driven lead generation company on the planet for real estate investors, and serves the role of being not just a lead generator for your business, but a marketing partner that is helping you achieve your goals along the way. Go to investormachine.com to learn more and schedule a call with our team today.
So it's very difficult to get into the, 20 plus unit properties here unless you've got millions and millions of dollars sitting in the sidelines.
Yeah.
So everything
Yep.
I own now is outside of Massachusetts, which brings in other challenges. I'm glad that I started locally because I was able to drive to the property, monitor the progress, make sure that the contractors were doing what they promised to be doing. And now that I've scaled out of state, it's forcing me to have much better systems and processes in place because I'm not able to jump in my car and drive over and check on a unit renovation or make sure that, the window has been installed or whatever has been done that needed to be done. So I think that again, I also grew up with a father who was investing in multifamily real estate. And even though I didn't know a lot of the details about it, but I knew that he was doing well and he loved what he did. And he loved the fact that you are the one that controls the property, right? So unlike investing in a stock where you put your money into a stock and you just kind of
Yep.
go along
Oh
for the
yeah.
ride, with a real estate investment, you have so much more control over your money and the valuation of that property. You can make choices that impact the property, directly. So I love that about real estate. I wanted to be able to control my own future and to have a direct impact on where my money is and how I'm making the decisions. So I knew that I wanted to be doing multifamily. And I also do multifamily. I know a lot of people do syndications, which is a lot of people
Yeah.
will like pool
Yep.
money together and buy a property with a group of 10 to 20 people, and each person will own a little piece of that pie, which is, it's a great way for some people to get into real estate. I have elected to own properties either on my own or with one partner, and we're 50-50 partners. We make all the decisions, we control the asset. We don't answer to anyone else. We don't worry about having someone else's capital in the deal because a
Yep.
lot of
It's huge.
times, that's a big burden when you have other people's money and you're making decisions on their behalf. So while we do
Yeah.
sometimes
Huge.
we'll sometimes bring in an investor or two into our deal, but we don't syndicate our deals because we don't want to give up the majority of the equity and we don't want to be responsible for, 20 people's livelihoods. So we
Yeah.
like
I
when
mean, it's a huge burden. The syndication thing is no small, it's not like something you could just gloss over because the penalties are like jail.
right.
So it's not like you could just syndicate willy-nilly and screw up and now you're moving on to the next deal. It doesn't work that way. And I think, what's interesting about what you're doing in having, one partner or an investor is that, and I tell folks this all the time, the fast money in real estate is really the slow money. You got started working in these
Yeah.
smaller multifamily, in Western Massachusetts and then scaled
Hmm.
up. And so being able to see the growth and hear the growth from you speaks to this idea that, okay, you're going to basically break off one chunk at a time, take on a partner, start investing in state, then invest out of
Yeah.
state. Speaking of which, the out of state investing, there's so many different places where folks can invest. It can be tricky, it can be overwhelming, especially if you're in the East Coast or the Northeast and you're looking at totally different markets with different conditions, different population density,
Hmm.
different average price of a single family home, let alone multi. But there's also a lot of amazing
Right.
areas to invest as well. What are some of your favorite areas to look at deals at?
If you're a new or newer real estate investor looking to launch or grow your real estate investing business, please check out Investor Fuel Club. It's a coaching community, but unlike anything you've ever seen before. And you can actually partner with members of our mastermind from coast to coast on deals right in your market. There's no better opportunity to build a consistent business than to literally partner with pros to help you avoid costly mistakes, avoid the need for capital to do deals, and help you eliminate your fears as you're starting your business. Learn more about Investor Fuel Club at investorfuel.com/club.
So we took a lot of time on this on determining where we want to be, and we kind of landed in Ohio, Kentucky, and the Carolinas. And a lot of that is dictated by the fact that you can still find opportunities in these markets. So there's still reasonable prices, and the ratio of the price per unit to what kind of market rent you could get is really favorable. Like in Massachusetts, you're going to spend on an average apartment, you're going to pay 400 to 500,000 for that apartment to buy it, and then the average rent might be 3,000 a month. So with that ratio, you're literally not going to cash flow at all after paying your expenses. In Ohio, we can still get into a property at under 100,000 a door, depending on, the market, depending on condition, depending on age. But typically you can still get into a property at under 100 a door, and you're able to get, 1,200, 1,500, 1,600 per month rent for that unit once you renovate and stabilize that property. So the numbers just make a lot more sense. You're still able to cash flow after paying all of your expenses. So,
Yeah.
it's a challenge because obviously I'm not there. So we had to work very hard to establish a local team, get trusted brokers, get trusted property managers, contractors. We have multiple layers of teams there. So we're now able to have checks and balances. We'll have our contractor doing work on a property, and we'll have one of our property managers stop by and make sure that what he says is being done is truly being done. We'll have our real estate agents stop by and make sure that the windows got installed, that were supposed to be installed. So it's all about coming up with the right systems and the right processes to be able to manage out of state. But you do have to make sure you've got people that you trust and that are going to do the right thing for you. And we had a few not great experiences. We had to switch property management companies a few times. So it is all about trial and error. And one of the things I learned in, real estate investing, especially multifamily, is that there's going to be a lot of challenges. You have to expect them. Like you can't let a challenge slow you down. You just have to kind of budget for it, anticipate that things are going to come up. And when it does come up, you have to say, okay, what do I do now to fix this?
Yeah.
How do I move forward? How do I move the needle forward? Because, dwelling on things that happened, being frustrated by them, letting them impact your actions going forward is not going to work in this industry. You just have to go full steam ahead, deal with anything that comes up along the way, uh, figure out how to recover from it, and use the learnings to try to mitigate challenges down the road. That's the best you can do. But challenges
Yep.
are going to come up.
They're gonna happen. I mean, I had multiple mentors tell me that if you're looking for, the perfect opportunity to either invest in real estate or as a realtor, to advise clients on when the right time to buy is, you're gonna be looking forever.
Right.
There are people in 2019, 2020 when that was really, the perfect time to
Hmm.
be investing in so many different segments who were saying the same thing when it was like threading the needle of real estate perfection from the buy standpoint. We are coming up on time here though, Mariana. Where can folks go if maybe they're interested in reaching out to you or your team? Maybe they have a deal they'd like you to take a look at in Kentucky, for instance. How can folks reach out to you?
So I am mostly on Facebook. I'm going to date myself. You can find me on Facebook, and it's just my name, Marianna Osipenko. And then my partner and I do have a website that we use. It's the Maven, Maven capital.com. So themavencapital.com. And that it's a very new site. We just launched it. This is my partner and I, all of our investments in the states that I mentioned. And we would love to connect. Happy to chat, answer any questions, talk about our journey so far.
Mariana, thank you so much for coming on the show today and for talking about your journey and multifamily. Thanks for coming on today.
Thank you. Appreciate it. Have a wonderful day. It was nice chatting, Dylan. Thank you.
Thanks for joining us for today's show. You can learn more about the amazing benefits of the Investor Fuel Mastermind community, including surrounding yourself with hundreds of other rock stars, 100% financing on your deals, and members-only discounts from vendors you're likely already using that, as a member of Investor Fuel, will save you more than the cost of your membership. Visit investorfuel.com to learn more. You can also check out the show's notes for access to free resources, how to get access to world-class lead generation, and even how to work with me directly one-on-one. Don't forget to subscribe so you never miss another episode. See you on the next show.